QuickBooks Pro Plus Desktop 2022 OneNote presentation, new vendors setup and accounts payable beginning balances. Let's get into it with Intuit's QuickBooks Pro Plus Desktop 2022. If you have access to OneNote, would like to follow along, icon, left-hand side, topic introduction, 6360, new vendor setup and accounts payable beginning balances. Also take a look at the immersive reader tool, topic introductions in the text area too. Same name, same number, but with transcripts that can be translated into multiple different languages and either listened to or read in them. Same name and number as the presentations as well. Topic introductions designed to give an introduction to the topic, provide screenshots, links where applicable, give accounting background to complement the presentations and can be used to follow along with them if you don't have access to the software at that time. Closing the icon on the left-hand side, we got the screenshot of the home page to start out with. These are our beginning balances. We're moving on down to the accounts payable at this point. We're skipping a couple accounts because we're doing kind of the more difficult ones first. This one being more difficult in a similar way or for a similar reason as the accounts receivable, because you can't just put it on the books or enter it as the beginning balance because QuickBooks wants you to have the supporting data by who you owe the money to by vendor. So we're going to be scrolling down. We can then go to the chart of accounts, which you can find the list drop down chart of accounts. If we look at that accounts payable account, in other accounts, you could just go in there and there'd be an opening balance here and you can add the opening balance, but you can't do that in the accounts payable because QuickBooks is saying, I will not let you do that because you need to give me a vendor that you owe the money to so that I can make the subledger breaking out the information by vendor. If we looked at the fixed assets, they do have the opening balance kind of little button here. So it's not a fluke. It's not a glitch in your machine. You didn't get a faulty program with the QuickBooks program for the accounts payable. It doesn't have that button there because QuickBooks doesn't want you to use that button for that particular account. What are you going to do instead? Go to the vendor drop down, the vendor center, and then we can add a vendor. So we can add a new vendor and you got your opening balance right there, which gives QuickBooks both who you owe the money to and that opening balance amount, allowing them to create the accounts payable on the balance sheet as well as provide the subledger broken out by vendor. So we can also go to the vendor drop down. We can add multiple vendors here, but we don't have multiple vendors this time. So we're just going to add the one vendor. This is what it looks like with the multiple vendors. Looks much similar to the customer layout. You can customize it. You can adjust your headers so that you can copy and paste possibly from a spreadsheet like Excel directly into it, making it as easy as possible. So you got the same kind of setup to sort out and add and subtract your column headers. We're just going to add one vendor. So this is us adding our vendor, which is Epiphone, and we're just going to put the beginning balance right there as of 12/31/21, the first day of the prior period. Important because QuickBooks is likely to be increasing the accounts payable and the other side going to maybe an expense account because it's usually a bill that increases a vendor's payable and the other side is often an expense account. So if I enter that, then we see on the balance sheet, we got this liability, $15,000. That's what we wanted. The other side, it looks like it netted it out in net income down here, which means it put it on the income statement. If I go into that, it created a bill. I didn't make a bill form. I just put it into the opening balance for a vendor, but bills are the things that increase accounts payable. So that's what QuickBooks used to make the increase to accounts payable. Other side, they dumped down here into uncategorized income. That's weird. Does that mess anything up? No, because it's going to be in there as of the prior period. So now we got this uncategorized income. I'm sorry, that's uncategorized expenses. So now we got this income statement of uncategorized income and uncategorized expenses. Totally weird. Doesn't make any sense, but it's in the prior period. So it doesn't matter because we're doing our books as of the cutoff going forward, January 1st, 2022. This net 555 or 5500 will roll into the equity section, wash out of the income statement, not be a problem for us going forward. So as of January through December, in other words, 2022, nothing's in the income statement, no problem. So we have now got the balance in place from our beginning balance of the $15,000. The other side is netting out somewhere to equity as has been our plan. And so we're okay with that. It'll all wash out in equity and then we'll fix the equity in the last step of our process. If we think about this with just journal entries, if you were to enter this in like an Excel spreadsheet or make it with journal entries, this would be basically our starting point. We would say, okay, and now I'm going to add the accounts payable, which would be a credit. If you're doing debits and credits, the debit then go into the equity. So it would look like this. We increase the accounts payable. With that credit, the other side go into equity. So if you've had an accounting background, it's as easy as that to get the balances correct. But you have this added difficulty of knowing that I need this $15,000 to be supported by who we owe the money to. So I know who to owe the money to. Some accounting software such as QuickBooks won't let you enter a journal entry in unless you tell them who you owe the money to, unless you give them a vendor. Here's the general ledger. So the equity was at the 0, went up by the 2,896, then by the 20,005, then it decreased by the 15,000, now at the 8,396. It will continue to wash out as we enter all the other beginning balances until it will be correct after we have done so. And then we got the accounts payable increasing to that 15,000. Here's the subledger breaking out by vendor who we owe the money to. The 15,000 owed to Epiphone, matching total vendor subsidiary ledger, matching the accounts payable ledger. That's how it's going to work in QuickBooks. They force us to give the information by making us give a vendor, possibly entering the beginning balance directly into the vendor information as we did, so that QuickBooks can make these two things at the same time, making the accounts payable on the balance sheet and the subledger given by a report breaking out the vendor balance summary, vendor balance detail reports by vendor.